Hello and welcome to the day ahead. It is Monday, May 16th. I'm Andrew Gagan. The global market sell-off eased to end last week. European shares climbing with the stock 600 snapping a 4-week losing streak as bargain hunters swooped in after stocks were battered over investor worries, hot inflation and aggressive monetary tightening. A similar story in the US, the Dow snapping a 6-day losing streak with investor sentiment supported by comments from Fed Chair Jerome Powell reassuring markets bigger rate hikes are off the table for the time being. Now, stocks specifically Nike and Salesforce leading the charge higher there while tech rebounded. Shares in Twitter taking a beating, plunging nearly 10% after Tesla's chief executive Elon Musk claimed his $44 billion takeover tilt for the company was temporarily on ice as he investigates the number of bots on the platform, though remains committed to going ahead with the deal. Shares closing the day there at just over $40. That's a staggering discount to the $54.20 offer price from Elon Musk. And on Treasury markets, yields were higher on Friday, reversing the week's rally in prices driven by the largest weekly inflows since the COVID pandemic slammed markets in 2020.
And of course, that is resulting in a ratcheting up in bond yields, 2 or 3 steps forward, 1 step back. Bond yields have stepped back a little bit this week as share markets came down, but as bond yields go higher, that also puts pressure on share markets. So share markets have been hit by a bit of a pincer. Obviously higher bond yields, which is negative for valuations, and at the same time these worries about recession, which would obviously be negative for earnings. We think ultimately we'll avoid a recession, but you'd have to say the risk has gone up.
Well, major currencies were mostly weaker against the US dollar. However, the Aussie dollar rising from lows of around 68.5 US cents, climbing well over 1%. It is now sitting comfortably above 69 US cents. Elsewhere, the University of Michigan US Consumer Sentiment Index coming in below forecast to be at its lowest since 2011, with inflation worries seen to be eroding confidence. US import prices for April rising 12% year on year, while exports were up 18% on the year, down from the previous month, and reinforcing the view that peak inflation may have passed. Meanwhile, Fed member Neil Kashkari saying that inflation is still too high, although he added that the Fed moves will depend in part on how quickly energy and other supply constraints dissipate. And fellow Fed member Loretta Mester saying she supports 50 basis point hikes in June and July, flagging the September meeting is a moment to take stock of price pressures. Looking at the data on the docket in the week ahead, stateside focus will be on retail sales as inflation continues to soar. Consumers have been burdened by rising energy prices and tightening financial conditions, which are expected to hit the figures released on Tuesday. And the Fed, plenty of speakers to focus on this week, highlighted by FOMC Chair Jerome Powell, speaking about inflation at Wall Street Journal's Future of Everything Festival in New York. And the reaction in the bond market to any of the Fed comments will be closely watched. This after the 10-year yield topped 3.2% last week, with some analysts saying the retreat from that level is what provided the market rally on Friday. Well, the rally to end the week is set to continue locally today, with ASX futures currently up close to 0.8%, the Australian share market having lost 1.8% last week. Global oil prices spiked on Friday, pushing Australian petrol prices higher over the weekend, while US Bowser prices rose to a record high. The price surge coincides with news that China appears ready to ease pandemic restrictions, which would increase demand, while there are concerns supplies will tighten if the EU bans Russian oil. Brent crude up 3.8% to 111 US dollars a barrel. Iron ore futures rose more than 0.5% to 130 US dollars a tonne, although last week the iron ore price fell close to 5.5%. Base metal prices were mixed for the week, but the price of tin plummeted 15% over the week. Spot gold was trading near $1,811 an ounce, having lost 4% for the week. And most cryptocurrencies traded higher over the weekend as bearish sentiment eased. Bitcoin currently trading comfortably above 30,000 US dollars, to be down more than 10% over the past 7 days. Looking at the week ahead around the region, and China will be the focus as Shanghai begins its gradual reopening, such as shopping malls and hair salons after weeks of its strict COVID lockdown. This ahead of key retail spending, industrial production and unemployment figures released today. And closer to home, it's all eyes on the jobs market with official unemployment figures on Thursday and the closely watched wage price index Wednesday, which could impact Reserve Bank expectations. That is your day ahead. See you again tomorrow.